Ali Ayala Land, Inc. Ayala Land files P50B long-term bond program for SEC registration. Property giant Ayala Land Inc. filed a new long-term bond program worth as much as P50 billion to strengthen its balance sheet amid plans to increase its expansion budget for 2023. In a published notice over the weekend, Ayala Land said it filed a registration statement for the bonds with the Securities and Exchange Commission last March 13. The developer said it planned to raise P12.25 billion under the first tranche of the 2023 bond program. This could be upsized B. Another P5 billion, the notice showed. It also plans to raise P4.75 billion to be included as the final tranche under a previous bond program. The board of Ayala Land approved the 3-year self-registration plan during a meeting last November 25. Ayala Land Chief Finance Officer Augusto Bengzone said during an interview last month the company was preparing to raise up to P60 billion in debt issuances to stretch loan maturities and lower financing cost. Ayala Land is preparing to aggressively expand despite the elevated inflation and high interest rate environment weighing on the 2023 outlook for the property sector. During its quarterly briefing last month, company's CEO Bernard Vincent O'Dai said they would boost capital spending by 17% to P85 billion this year. The builder will allocate 39% of the budget to the residential sector, which was hit by a higher than expected rate of cancellations in 2023. Ayala Land will also boost residential project launches by 19.5% to P110 billion. This could be upsized further to P130 billion. In case of strong demand, Dai said, the remaining capital spending budget will be allocated to land acquisition, 23%, estate development, 16%, malls, 8%, offices, 4%, hotels and resorts, 3%, and other projects. Ayala Land ended 2022 with profits of P18.6 billion, up 52% from the previous year. SMC San Miguel Corporation San Miguel slashed water use by nearly 22% in last 6 years. Conglomerate San Miguel Corp. SMC has saved more than 33.8 billion liters of water in the last 6 years, reducing its use of scarce water across its units by 21.65% as part of its Water for All initiative. SMC said this was equivalent to the yearly consumption of over 94,000 households, or the monthly use of about 1.13 million families. The company, whose businesses span food, drinks, power and infrastructure, saved around 6.4 billion liters in 2022 alone. Water issues have always been a priority for San Miguel, especially since much of our operations and all our communities depend on access to water, Ramon S. Ang, SMC President and Chief Executive Officer, said in a recent statement. This is why we have not let up on our efforts to continuously increase water savings at our facilities across the whole San Mig Group, he added. Local oil firm Petron Corp. topped the list of operating units with the most water savings amounting to more than 17 billion liters conserved since 2017. This was attributed to the company's use of water desalination technology, a system that removes salt from seawater, at its cooling facilities in Limay, Bataan Province. Desalination accounted for the majority of the San Miguel Group's water reduction, with 2.8 billion liters of seawater collected in 2022. San Miguel Global Power and Ginebra San Miguel were the next biggest water savers within the group, with 1.5 billion liters and 1.1 billion liters of water conserved last year, respectively. SMC launched its Water for All sustainability initiative in 2017 and has since invested on programs and innovations in support of water recycling and reuse. The initiative mandates a 50% reduction in utility water use across all SMC companies by 2025. Jgs Summit Holdings, Inc. CFO Brian Go buys P110 million JG Summit shares. A cousin of ultra-billionario Lance Gokongwei has recently amassed a significant pile of Smc Jgs shares. JGS Chief Financial and Risk Officer Brian Goh purchased a total of 2.237 million shares at P49.30 each on March 1. The purchase makes him the fifth biggest shareholder among JGS officers and directors. Goh is the son of billionaire James Goh, the youngest brother of the late Taipan John Gokongwei. He was appointed to his post in May 2021. FNI Global Ferronickel Holdings, Inc. FNI expects to sustain growth in 2023 on higher nickel prices, China's reopening. Global Ferronickel Inc. FNI expects to maintain profitability throughout the year as it benefits from higher nickel prices and reopening of the Chinese economy. FNI reported a net income of P2.2 billion last year, up 9% despite a 13% decline in revenues due to adverse weather. The company's shipped volume also decreased by 24% last year. FNI President Dante Bravo said that the company plans to expand its nickel ore production by 20% this year, with addition of the Palawan mine. This should allow FNI to carry out production all year round and generate improved financial growth as they integrate business. Bravo also noted that FNI's medium-term strategy includes the construction of a steel processing plant in Bataan and development of a nearby port. Its nickel ore production by 20% with the addition of the Palawan mine, which has an annual production capacity of 1 million WMT. The start of commercial operations at the Palawan mine along with the acquisition of 20% interest of GCTN, Guangdong Century Tsingshan Nickel Industry, both in the fourth quarter, should enable us to carry out production all year round and generate improved financial growth as we scale and integrate the business, Bravo said. We believe this positions us to achieve more consistent profitability throughout the year. It will also allow us to benefit from higher nickel prices and China's ongoing reopening, which is expected to prompt a rebound in stainless steel production and the new energy vehicle supply chain, he added. Bravo said FNI is also on track with medium-term strategy, which includes the construction of a steel processing plant in Bataan and the development of a nearby port. Alternergy Holdings Corporation Vince Perez-led Alternergy appoints former SEC Commissioner as advisor. Alternergy Holdings Corp. has appointed lawyer Efro Luis B. Amatong, former Commissioner of the Securities and Exchange Commission, as advisor to its board. The appointment came following the company's debut on the Philippine Stock Exchange (PSE) on March 24. Alternergy was th. first company to hold an initial public offering in 2023. Commissioner Amatong has a solid track record on financial markets and securities as a former SEC commissioner. His work as Supervising Commissioner of Markets and Securities Regulation helped create the right regulatory environment and set the stage for Alternergy to take the plunge of an IPO, said company chairman Vince Perez. According to Perez, the IPO has given Alternergy a fresh inflow of capital to advance to construction phase 2 of our project under development. These two projects are the Solanas Solar Project in Bataan and the Lamit Run of River Hydro Project in Ifugao. Perez said the window for other capital raising activities has been opened wider and Amatong can be very instrumental guiding Alternergy with our future capital market issuances, particularly in the area of green bonds. He said the green bonds could be one of the financing modes to tap to fund future financing requirements of projects in the next 3 to 5 years. Following his retirement in March 2022, Amatong was consultant of multilateral development institutions including the World Bank Group and the Asian Development Bank. This includes acting as a consultant for the Sustainable Banking and Finance Network, SBFN, supported by the International Finance Corp., and as advisor to the ASEAN Capital Markets Forum sponsored by the ADB. Amatong served as SEC Commissioner from May 2014 to March 2022. Shlph Pilipinas Shell Petroleum Corporation Dutch should shut down gas field, says local Shell boss. The Dutch government should shut down Europe's largest gas field as early as this year, a top Shell Netherlands official sigh. Sunday, despite global energy uncertainties following Russia's war in Ukraine. Gas have been pumped from the massive northern Groningen field since 1963, but residents have been terrorized by increasing violent earthquakes for more than 2 decades, directly attributed to mining operations. The field must be closed. It can be done and it has to, Netherlands Shell outgoing President Marjan van Loon said. The parties involved believe that the field can be closed this year if you look at the data, Van Loon told the WNL television talk show. Although gas extraction from the field has been almost cut to zero over the last few years, the Dutch government have flames burning due global energy uncertainties prompted largely by Russia's full-scale invasion of Ukraine a year ago. Perhaps it's uncomfortable to really quit something like this during an energy crisis, but it has to be done, said Van Loon. Steps down as the Dutch-based arm of Shell's president at the end of the month. She added that Shell Netherlands would pay for damages and to strengthen infrastructure in the area, but we need to see how best that can be done and it has to be well organized. Shell Netherlands and ExxonMobil have an equal stake in the NAM, the company responsible for drawing gas from Groningen. Since the early 1960s, a final cabinet decision on the gas field's closure is set to be taken in June, but depended on the international situation, Dutch government said. So far Groningen's residents, who suffered severe damage to their homes and buildings from the slew of quakes, have received trickle of compensation, caught in a bottleneck of bureaucratic bungling and red tape, said a report, released by a parliamenter. Commission of Inquiry last month. MWC Manila Water Company, Inc. Maynilad announces water interruptions in parts of Metro Manila, Cavite. Water interruptions will hit parts of Metro Manila and Cavite as water concessionaire Maynilad moves to conserve the current water supply in preparation for a long summer season. Advertisement Maynilad announced Monday that portions of Manila, Malabon, Caloocan, Navotas, Las Piñas, Parañaque, Makati, and Pasay will have low water pressure or at times no water starting March 27, 2023. The water interruption is part of a measure to preserve our limited stored water, given the increased likelihood of an El Niño phenomenon happening by the latter half of 2023, said Maynilad in a statement. While the elevation in Angat Dam, which provides 90% of the raw water supply for the West Zone, is still at a healthy level as of mid-March, sufficient rains are not expected to fall over the watersheds in the succeeding months to replenish the dams, Maynilad added. Maynilad also said in its advisory that the water interruption will also affect parts of Bacoor, Rosario, Noveleta, and Cavite City. These daily service interruptions will last depending on the actual raw water volume that our treatment plants will receive, as well as on actual rainfalls that will occur at the watersheds, added Maynilad. We advise our customers to keep enough water stored for your needs during the hours when supply will not be available. Please keep stored water in clean, covered containers. Meanwhile, in Dano Tingkungko report on 24 Horas, Weather Bureau Pagasa expects the humid weather to last longer this year because of the El Niño phenomenon. Baka medyo humaba ang dry season natin baka abutin tayo ng July bago umulan. Kaya sa ngayon pa lang kahit sabihin na nasa normal condition ang mga dam natin, dapat mag-umpisa na rin tayo mag-conserve kasi di natin alam kung gaano katagal ang epekto ng dry season natin, said Edgar de la Cruz, Pagasa Hydrometeorology Divisions. The dry season may last longer this year. We may have to wait until July before it rains. So, we should already start conserving water while the water in our dam is still in normal condition. We don't know how long this dry season will last. Vince G. Lopez. GMA Integrated News. Bdo Unibank, Inc. Bdo to buy out Keppel Group's stake in Podium Complex.
Psi-led Bdo Unibank Inc. is set to buy out the stake of Singapore's Keppel Group in SM Keppel Land Inc. SMKL, effectively taking full control of the Podium Complex in Mandaluyong.
Advertisement in a regulatory filing. BDO said its board approved the purchase of the 50% stake of Keppel Philippines Properties Inc., KPPI, and Open K Properties Inc. in SM Keppel Land Inc., SMKL, equivalent to 50% of the outstanding stock. The transaction is set to be made on a cash payment based on adjusted net asset value at closing. Further details on the transaction were not immediately available. Through the acquisition, BDO will consolidate its ownership of the Podium Complex, which consists of the lender's corporate center Ortigas, the West Tower, and the Podium Mall. Data from KPPI indicates that the Podium Complex is a mixed-use development with 50,000 square meters of mall space and 90,000 square meters in the West Tower. According to KPPI, the consideration was arrived at on a willing buyer, willing seller basis, taking into account the agreed value of the assets and the net asset value of the sale shares.
Following completion, SMKL will cease to be an associated company of KPPI, it said in a separate disclosure.
The share purchase agreement for the transaction was signed by the parties last Saturday, March 25, with the completion subject to regulatory approvals of the Bangko Sentral ng Pilipinas, BSP, and the Philippine Competition Commission, PCC.
BDO is the banking unit of the SM Group, offering leasing and financing, investment banking, private banking, bancassurance, insurance brokerage, and stock brokerage services.
Its subsidiaries include BDO Capital and Investment Corp., BDO Private Bank Inc., BDO Leasing and Finance Inc., BDO Finance Corp., and BDO Securities Corp. BDO reported a P57.1 billion net income in 2022, up from the P42.8 billion the previous year. It was the biggest bank in the country in terms of assets as of September 2022, with P3.726 trillion.
Meanwhile, KPPI is primarily involved in property development through its associates and joint ventures. Its wholly owned subsidiaries include CSRI Investment Corp. and Buena Homes Inc. Shares in BDO closed Monday down by P0.50 or 0.39% to P126.50 apiece, and those in KPPI were down by P0.2 or 6.67% to P2.80 apiece. BM, GMA Integrated News.
RLC Robinson Land Corporation Frederick Go goes thrift shopping, snags P13.5 million Robinson's land shares. Billionaire Frederick Go went thrift shopping in Robinson's Land Corp. RLC stock as he bets on the continued surge in MA traffic and bounce back in tourism. The RLC president and CEO purchased a total of 1 million shares on March 17 and at a price range of P13.52 to P13.60.
Go bought a day after RLC slumped to P13.38 on March 16, its lowest since mid-2020, largely due to the stock's exit from TH.
Philippine Stock Exchange Index last January. RLC, one of the biggest shopping mall and hotel operators in the country, also increased its share buyback program by 5% to P9 billion amid a positive outlook for the mall and hotel business. RLC has already spent P4 billion of its initial P billion buyback budget. Mreit Inc. Mreit says SEC approves acquisition of 4 new office towers for P5.3 billion.
Megaworld's listed real estate investment trust Mreit said on Monday it has secured the approval of the Securities and Exchange Commission for the acquisition of 4 office properties in McKinley West and Iloilo Business Park for $5.3 billion.
The 4 office properties, which are the Festive Walk 1B and 2 Global Center in Iloilo Business Park and the 1 West Campus and 5 West Campus in McKinley West in Taguig, are Grade A Philippine Economic Zone Authority accredited, Mreit told the stock exchange. Mreit said the new acquisitions would have a total gross leasable area, GLA, of 44,567 square meters, which would bring the company's total asset portfolio to 325,000 SQM, higher by 16% from its current 280,000 SQM. The properties will be exchanged for 263,700 primary common shares at P20 per share, it said.
The SEC approval of our property for share acquisition results in the recognition of income from the new assets by Mreit from January 1, 2023, which will help drive our growth, Mreit President and CEO Kevin Tan said. As of the end 2022, Mreit said the 4 prime office properties have an occupancy rate of 96%, which is above the industry average of 80 to 81%. With the recent acquisition, Mreit said its portfolio would be 18 office properties in 4 Megaworld townships.